This is an extremely simple strategy, only consisting of three components, but these three components come together to create some highly accurate trading opportunities that can provide really good reward to risk opportunities as well, just like we have here on the Aussie Yen. On the Aussie Yen, I have a trailing stop in place at an 11.3 to 1 reward to risk ratio, and this came from the strategy you're about to learn. So first things first, let's go up here to whiteboard and I will break down the entire strategy for you. So for starters, we're looking at swing highs and lows. If a market is doing this, these new lows from our previous low to our new low, that is a swing low. These new highs, we go from a previous high to a lower high, those are swing highs. We're looking at these swing highs and lows, and this is normally what a downtrend would look like. What we're waiting for is price to push up and break through the previous swing high. That is our first component of this very simple strategy. We then want to see price pull back to that previous swing high. This being our first component, our second component is actually this combining with a moving average. So this is going to be the 200 EMA, and what this does is it combines, it stacks up two different areas of value. The first area of value being the previous resistance level price just broke, telling us that price is likely to reverse and start heading up from our previous downtrend. The second area of value being the 200 EMA. As price comes down to the 200 EMA, we want price to at least touch our area of value and at least touch the 200 EMA. Then our third component is some type of candlestick pattern. For this example today and what I used on the Aussie Yen trade, we're going to use hammers and shooting stars. At this point, we have stacked up two areas of value and a candlestick pattern all coming together to prove that we have a higher likelihood of price continuing up at this exact moment than it continuing down. And if you add that to a good reward to risk ratio, you come away with profits over a long period of time. So let's really quickly go over a bearish version of this, then we'll go down to some real charts, check out the Aussie Yen trade, and I'll break that entire trade down using this exact strategy. For a bearish version of this strategy, we would see price going up this time, making new swing highs and lows higher than the previous swing highs and lows. And then we would want to see our first component for a bearish trade is a break of the previous swing low. After that break of the previous swing low, we would want to see price pull back to that previous swing low. We would want that to combine with what? A 200 EMA, which I'll show you how to put on the chart in case you don't know momentarily. After we combine our 200 EMA area of value with the previous level of structure support that was broken and now should become resistance if markets are trading in a technical way, what are we looking for after that? After that, we'd be looking for, in this case, an upside down hammer, a shooting star, a candle with a long wick to the top side, does not matter what you call it, all of them mean the same thing. They all mean selling pressure, and selling pressure in combination with the other factors we have, like price at a previous support that should become resistance, like price at the 200 EMA, mean that we have a higher likelihood of price continuing lower and hopefully hitting our profits if we're going short. So now that I broke down this strategy on a whiteboard in a really quick and broad way, let's go ahead now and take a look at some real charts and discuss how you can use this strategy and start making profits in your own trading account. Here's our first example on the Aussie Yen. Let's break it down. So the first thing we need to see is price starting to trend in the downward direction. I'll draw out our swing highs and lows. We go from swing high to swing low, back up to lower high, down to lower low, up to lower high, down to lower low. We continue this process of lower highs, lower lows, lower highs, lower lows, until eventually what happens? Eventually, this happens. We reverse. This is our first sign that price wants to start heading higher at any point. When we see lower high, lower high, lower high, lower high, lower high in combination, and after that, we see one of those lower highs broken, that is our initial sign that price could possibly be reversing. For this strategy, one of the things we're looking at is that previous swing high that was just broken because it can act as a major level of support. So if I do this and we draw a box on, because these areas are going to be zones and not necessarily a line on the chart, you can see that price after breaking above that swing high zone, did in fact pull back into it. Now, what's the other thing we have to see? We want to see a combination of confluence from a technical analysis standpoint. Trading this on its own, just the break of this previous high, can be profitable, but not nearly as profitable as if you combine this with another area of value. The 200 EMA is a major area of value. So now that we've seen our first rule met, we need to see price at least touch the second area of value.